Coming up on Market to Market, a deep look at the lab working to unravel the mystery of HPAI. We begin our series of lookbacks of our first 50 seasons and commodity market analysis with Ted Seifried next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next because a pioneer, our name, is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors, new parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, September 6th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. The Federal Reserve is on the clock on what they will do with the key interest rate. The news was mixed from Washington, D.C. Friday as the Labor Department issued its monthly look at hirings. Employers added 142,000 jobs, nearly double July's mark. The unemployment rate moved down by 0.1 of a point to 4.2%, which was the highest level in 3 years, but still close to 50-year lows. The Fed is set to cut rates in 2 weeks, but by how much becomes the fodder for talking heads and traders in the fight against inflation. The Wyoming Game and Fish Department confirmed this week the state's first case of anthrax in nearly 70 years. A dead moose was found on Tuesday and died because of the bacterial disease. In Carbon County, 50 to 60 head across several herds were killed by anthrax, according to the state veterinarian. Viruses like this one draw serious attention. Highly pathogenic avian influenza has already been found in poultry across several states, but it was the move into dairy cows that prompted a new round of questions and few answers. Peter Tubbs looks at one lab in the middle of the outbreaks and research.
Research into the highly pathogenic avian influenza virus that crossed from birds into the nation's dairy herd continues at the National Animal Disease Center in Ames, Iowa.
This avian influenza virus, which would normally stay in birds, has gone into more than 20 different mammalian species, more than 100 times in 2 years. So this group of viruses don't know exactly what it is, but it has the capacity to cross the species boundary.
The NADC confirmed earlier this year that the virus passed from cow to cow via the mammary glands during milking. Current research is exploring if there are other routes the virus can pass between dairy animals.
We do not know nearly enough about how this virus is transmitted among animals. That's why what we're doing right now is really important. So we are evaluating the spread on milking equipment, but then we definitely need to consider some other avenues too.
The USDA has confirmed 197 cases of HPAI across 14 states in 2024, including 17 new cases in the last 30 days, led by 5 in Colorado. Researchers at NADC have also begun the initial phase of testing of a vaccine for avian flu in dairy cattle. The vaccinated animals are now being tested for an immune response generated by the vaccine. From Market to Market, I'm Peter Tubbs.
The year was 1975. Jimmy Carter was just launching his long shot campaign for president in the state of Iowa. Also that year, and in that place, a new television program was in the works that would focus on agriculture. What you now know as Market to Market had a lot of news to cover in that first decade. David Miller begins our series of look-backs at the history of this body of work and those involved in making sure the weekly Journal of Rural America is sent around the world each week. This is our cover story.
On Friday, October 24, 1975, Market to Market kicked off a 50-season run with its first broadcast under the name Iowa Farm Digest. The mission of the show was the same as it is today, to provide the people who live and work in rural America with in-depth news reporting and reliable commodity market analysis.
Produced October 15th.
Hello, I'm Chet Randolph. Welcome to the first edition of Farm Digest.
In October of 1976, our name changed, but the mission remained the same. Along with executive producer Dan Miller, Bill Hanley was among the first reporters on the show.
It's that kind of impact that we were never prepared for if you went into television. You didn't think stuff stuck around, and you didn't think you would have that kind of an impact on people. And obviously, Market to Market's had a huge impact on so many people in that industry.
In those early days, like today, our producers and crews covered stories and events in rural America from Maine to California. Over the course of the second season, we covered the cost of lobbying for upgrades to what was already considered to be an aging lock and dam system. There was a report on water pollution from feedlots and a segment on organic farming.
Lest anyone think that all of this was the result.
In our third season, President Carter's Secretary of Agriculture, Bob Berglund, talked policy and the future of agriculture with our host, Chet Randolph.
I think largely it's over expectation. What is the cost of production? Our studies show that the cost of producing corn ranges from a low of $1.74 a bushel to a high of $12.
In season 4, we looked at meat prices and the use of nitrites in meat production. Our coverage of innovation in rural America carried into our 5th season with an in-depth look at ethanol production, or what was then known as gasohol. The fledgling industry provided some hope that the renewable fuel might in some way hold back the effect of price-depressing, bin-busting harvests. As 1980 rolled into view, we changed our name from Farm Digest to Market to Market.
Hello, and welcome back to Market to Market.
That January, President Jimmy Carter rocked the agricultural world by placing an embargo on grain sales to the Soviet Union in response to its invasion of Afghanistan. By his own admission, Carter was hoping to cause a chain reaction where the lack of feed grains would cut swine production in the USSR, and the threat of a food shortage would push Soviet Premier Leonid Brezhnev to pull his troops out of the war-torn country.
If the 2-day trading suspension was supposed to...
The move, as reported in this edition of Market to Market, caused the Chicago Board of Trade to suspend trading for 2 days. The first sessions after trading resumed saw grain prices go limit down. The embargo remained in place until it was lifted by President Ronald Reagan in April of 1981. The Soviets would remain in Afghanistan for 10 years before leaving in defeat. According to some sources, the effects of the embargo lingered for nearly 2 decades.
More people jump on the catfish bandwagon.
Market to Market continued its exploration of entrepreneurial ventures with another alternative to traditional row crops and animal production.
And protest again.
Our focus on the news of the day included more than one discussion about who should have control over a farmer's land.
Hundreds of West Central Minnesota farmers have been doing for 7 years, protesting a power line.
I rise in support of the gentleman's amendment.
As season 7 dawned, we were covering the fight over the 1981 Farm Bill. The legislation included titles that expanded crop insurance and created milk marketing orders for the dairy industry. President Reagan signed the Agriculture and Food Act of 1981 in late December. We also took some time to go 2 decades into the future for a look at how we would feed a hungry world in the year 2000. Food safety has always been a subject we follow, and as part of our 8th season, produced in 1983, it was a look at pork.
So I guess the decision lies on Rich Reiner, and I have made the decision to postpone this sale.
In the early 80s, we began covering a major story that would dominate agricultural news for nearly a decade. Rural America was struggling with sky-high interest rates, a growing bubble on land prices, and record debt among the nation's farmers. The combination would create the 80s farm crisis. Sid Sprecher, Market to Market's executive producer from the early 80s to the early aughts, had a front row seat.
A lot of The victims of the farm crisis were farmers who were leveraging their farms to help the son or two sons get into farming. They weren't in debt until they started expanding to help their heirs. And so that was one of the cases that happened a lot.
So I'll take out the farmer's share, and that's the heel and one slice. That's what the farmer put in. That was the heel and one slice was all he put in.
And through it all, we explored prices, prices, and prices. Yes, this is John Roach, who had already been analyzing the markets for the program since 1978. As fallout from the farm crisis increased, we covered weather conditions that put more pressure on the nation's farmers, protests at farm auctions, and crosses on courthouse lawns across America. While we devoted time in Season 9 to cover the growing farm crisis, we also looked at climate change theory and dug deep into concerns over the lack of diversity in row crops. In our 10th season, we followed the story of the devastating famine in Ethiopia and took an early look at genetically modified seeds. Our reporting on the farm crisis continued. We added question and answer phone-in shows to our regular lineup of programs and covered events like the National Crisis Action Rally.
And then David Stockman comes along and says, unlike Washington and Jefferson and Lincoln, farm bankruptcies are needed. Forget David Stockman.
For Market to Market, I'm David Miller.
Forget David Stockman!
Next, the Market to Market report.
Technical signals turned positive, starting to unfold this holiday-shortened trading week. Then came Friday and several sell-offs. For the week, the nearby wheat contract added 16 cents, and the December corn contract improved a nickel. Meal led the soy complex until pressure built on losses in soy oil and energies. The November soybean contract expanded 5 cents, while October meal strengthened $10.70 per ton. December cotton shrank $2.07 per hundredweight. Over in the dairy parlor, October Class 3 milk futures fell 3 cents. The livestock market was lower. October cattle lost $3.42. October feeders cut $6.80, and the October lean hog contract dropped by $2.73. In the currency markets, the U.S. dollar index declined 82 ticks. October crude oil sold off $6.03 per barrel. COMEX gold lost $11.40 per ounce, and the Goldman Sachs Commodity Index fell almost 18 points to settle at $519.50. Joining us now is one of our regular market analysts, Ted Seifert. Hey, Ted.
Hey, Paul. How's it going?
It's going all right.
All right.
You know, we were good until Friday.
I know.
Wheat had one of those weeks. Wheat has been on a run.
Yep.
But then came Friday. What's the story there?
Wheat wasn't the biggest loser on Friday, but yeah, I think you can look at wheat a little bit differently than the row crops. I think wheat had gotten a little bit undervalued, not necessarily based on our domestic balance sheet, because our new crop domestic balance sheet, over 800 million metric ton, 800 million bushel carryover. That's a very healthy carryover for wheat. But globally, there's a little bit of tightness in wheat, and that's just kind of continuing over from all of the conflicts that we have. Wheat, I think, has upside potential, but it really kind of depends on the row crops. And I think wheat was allowed to go higher because we've had a halfway decent bounce in the row crops.
We had seven, I think at one point this week, 7 straight days of higher closes at the end. But then we look forward to global conflicts. Is this the commodity influenced the most by global activity right now?
Global activity as a whole, not necessarily just conflicts. I mean, when we look at the U.S. dollar, the wheat's the one that we think is the most sensitive to things like that. I mean, wheat is grown in so many places in the world and exported by so many places in the world that it's such a global market that currencies affect it, global economy affects it, trade, like shipping rates, things like that. I mean, it's just so many things that fluctuate the actual price of wheat rather than just the board.
Corn was one of those that was above $4 for a lot of the week, and then again came Friday. What changed?
Yeah, we stayed over $4, but
right.
Interestingly, for the last 2 weeks, the holiday week that we had the previous week and then this week, there was just a lack of sellers, and I think a lot of that has to do with the September contracts going into first notice day. A lot of contracts, cash contracts, had to either be priced or rolled. And once that happened, you saw cash selling really dry up. So there wasn't the American producer in there selling corn. The funds weren't selling corn. If anything, at the end of August, they were maybe taking some profits on their short positions because they had really good profits and they needed to make their realized P&L balance sheets look good. And then into the first week of September, you had a lot of risk off going on. And risk off in corn or really any of the grain markets right now means covering short positions for the money managers. So both of those things combined, I think, gave corn upside potential, but it was just because there was a lack of sellers. Now, what we saw on Friday, I think, changes that game a bit.
Well, that appeared, I mean, that was kind of like the main talking point for a lot of folks like you was, there's going to be some profit taking, Boy, it sure looked like a lot of profits were taken.
On Friday?
Yeah.
I think there's a lot of new sales happening on Friday. I think the profit taking was the bounce that we had.
Okay.
And then, the sales on Friday started with, I think, producer sales. I think there was some profit taking on your short-term speculators. But really what happened was the sellers that had been waiting for the last 8 trade sessions or so all kind of snowballed on top of each other. They were all looking for a signal, and you started to get it about midday Friday, and it really accelerated into the close.
March corn, 424.5, so 4.25. Are you selling right now?
Yeah, I think so. I don't think the harvest lows are in, Paul. We've got a whole lot of cash corn that has to move. Some old crop is still out there, but there's a lot of new crops just so underpriced, and this is going to be a very big crop coming in. I still think we're going to make new lows. Now, longer term, I am fairly friendly for corn because the balance sheet in corn, even since we saw the Outlook Forum numbers back in February, has been getting, I'm going to call it less bearish. We haven't gotten to a point where I'm going to say it's bullish yet, but it has gotten less bearish to the point where we basically need a 183 national average yield to stay above a 2 billion bushel carryover. So I think corn needs to fight for acres. I'm optimistic for corn once we put the harvest lows in, which I think might happen in October. But into the end of the calendar year, into January, February, planting, I see some upside mobility potentially for corn. At the very least, I see it gaining on the corn-bean ratio.
I'll go back to your October low in a minute. I need to get to beans for a minute. It's the soy complex, and it was complex this week.
Yeah.
Here comes China booking some sales. More to come?
Well, they need to. This is the time of year. I was on crop tour 2 weeks ago, and I come to expect daily flash sales when I'm on crop tour for the 5 days. And we had that this year, and it's good to see, but they're not massive numbers. In fact, if you look at the weekly export sales that we had this week, it was within the range of guesses. It was towards the higher end, but it was still 300 or a little over 300,000 metric tons below the same week last year. Now, keep in mind, last year was one of our worst export program years for soybeans that we've had in the last 10. We're currently roughly 5 million metric tons behind where we were this time last year on our new crop export sales. The USDA has the exports increasing by 150 million bushels. So that means we're about 9 million metric tons behind where we need to be to hit the USDA's number. So we need to average about 1 million metric tons better than last year each week. So somewhere in the twos. And that's a growing concern for me. I think without a major problem in Brazil, it's going to be a very big struggle to get to the USDA's target. And the USDA is already projecting well over 560 million bushel carryover. So the soybean story, in my opinion, I think is getting more and more bearish, while I just said the corn story is getting a little bit less bearish. But I'm really worried about what happens for soybeans here, not only into harvest lows, but also how the planting mix and the jockeying for acreage is going to go, because I think soybeans should be the big loser.
You said October low in corn.
Yeah.
October low for beans?
Yeah, I think beans could
harvest?
follow, but again, corn really needs to narrow that corn and soybean ratio. I think corn is the bigger winner going into the end of the calendar year, going into planting. Corn, I think, can still buy some acres, right? It really, I think, needs to. And 420 corn, 430, 440 corn doesn't really get us all excited because interest rates are high, although it could be coming down. Inputs are still high, right? So what does corn have to do to really get the acres that it needs? And so I, again, am optimistic for corn, but to some extent, I think soybeans, while rising tide may lift all ships, soybeans, in my opinion, really should lag behind, unless there's a major problem in Brazil.
Well, and here comes the March contract at 1036.5. Are you selling at this price?
Yeah, again, I don't think the lows are in quite yet. I think there's another few weeks here of downside. And then whether we get long or not really depends on Brazil. It is dry in Brazil. There's not a lot of rain in the forecast through the first half of September. So there could be some planting delays that could extend our export window a little bit further and close that 9 million metric ton gap that I just talked about. But if those rains do return in the second half of September, that window won't be extended far enough, in my opinion, to really get us caught up. So, yeah, we'll start watching the weather in Brazil. There is going to be a transition from our weather market to the Brazilian weather market, and that really starts with soybeans because corn's more of a second season concern.
This is probably more applicable to corn, but I do need to ask this question. Derek in Kansas wanted to know, Ted, who wins, harvest basis firming in the West Plains or harvest basis softening in the Eastern Corn Belt? Is there any positive there?
Yeah, you know, Paul, almost every year we have one half of the Corn Belt doing something a little different than the other half of the Corn Belt. And really the determining factor is more often than not the river, right? I mean, that's our export business, and it's so visible that it really kind of it mediates between the two. I do think that there will be some areas on the Western Belt that will have some rather strong basis this year. I mean, go to southern Minnesota, and those are some of the worst looking crops that I've seen out on tour in the 10 years I've been doing it for that area. So there, but I mean, then you also have some pretty good corn in Nebraska, so that might offset to some extent. And then the East is just really good.
Yeah. Let's talk about livestock for a moment. Cattle sell off on Friday, stick with the theme. But that's also because we also had the stock market go pretty lower. Again, they always seem to be tied to each other. Is this just a stock market? Is this an inflation worry? Is this an economic worry?
I think there's a lot of economic worries, right? Which is sort of atypical of an election year. Usually we're used to things staying strong into the election. Now there's a lot of major concerns. And we are talking about, you know, the Fed cutting rates. As you said earlier in your monologue, you know, by how much? But I mean, if you go back and do a lot of studies on when the Fed has cut rates, it doesn't necessarily correlate with strength in the stock market. A lot of times the stock market actually breaks after that. And you look at just the chart on the stock market, we had the deeper correction, we recovered, we didn't make new highs, and now it looks like we're rolling over. So this double dip potential in the stock market is probably one of the more scary things that we've seen since the onset of COVID pandemic. And that does not bode well longer term for demand for things like beef. It might actually bode well for pork. I think pork is becoming a Wall Street investor's sneaky recessionary play. I think that's part of the reason why, you know, on a day like Friday where the cattle complex is under a ton of pressure, relatively speaking, the lean hogs did fairly well.
So lean hogs, is that the discussion that everybody had who trades on their Labor Day weekend, and they said, hey, I got a tip for you. It's the hog market? I mean, that happens. I mean, I'm not making anything up here.
It happens. Yeah, you know, conversations around the pool, right? No, I think everybody's really concerned about the stock market, you know, and what's happening there. That was the question I got the most. And I also, you know, if somebody asks me what I think about everything, again, I'll go back to soybeans, right? I think that we are and have been, you know, I've been on the show for about a year talking about a potential train wreck in soybeans and how China's not using as much because they're changing their feed rations and their economy's not doing well. And that's just a double negative. And our exports versus Brazil have been slipping in our market share and so many different things, you know. And when you have lower prices, it's easier to plant soybeans because they don't cost as much. But for so many reasons, I just don't think we've fully realized the issue that we have in soybeans. I'm here to listen to the argument of, you know, sustainable aviation and how that's going to create a whole lot more domestic demand. And to that I say good, because we've needed that 10 years ago before we started trade wars and things like that. But it also means that we're going to have infrastructure built upon that. And to get infrastructure built, you have to offer these guys really fantastic profit margins for a long period of time for them to feel comfortable that they're going to invest in something and not, quote unquote, cook their golden goose by overproducing. So the uncomfortable truth, I think, is that soybean prices have to be really low for a long period of time for sustainable aviation to really take off. And then we have a policy, which is an issue. I know you want to come.
And I'm going to land this discussion right here. Thanks, Ted. Appreciate it.
Yeah, of course. Thanks, Paul.
All right, we're going to continue this analysis in a segment we call Market Plus. You can find both analysis and plus on our website of markettomarket.org. And a few of you have already signed up for our newest offering, the Market Insider newsletter. Get in on the ground floor of being the first to know information on this program and what is ahead. Sign up at markettomarket.org. Next week, we'll look at the early impact of California's Prop 12 on the hog industry. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because a pioneer, our name, is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors. New parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.